Okay, we're working recap here. We're working a swing trade from 41.50. We're short. We just had a huge monster move up off for the third day in a row. A bearish downside crunch earlier. Let me move this chart a little bit here. A bearish. I just bring it back up here to show those coming in later. Big monster crunch to the downside. Third day in a row of this type of stuff, where then what I think are the Fed riggers using quantitative easing are rigging the market, propping it way back up to this blue line again, which we marked these key blue lines right up to there. We went short at 41.50, and now what I'm doing is using the Fibonacci numbers here from this last leg up, which I'm expecting they're going to actually retrace this leg today at 22.50. So I'm running the fibs on this last leg up to try to map out a trip back down to 22.50 where we're going to attempt to hold to take profits. So what we're seeing now is this pullback down to the 50% level marked by this white dashed dot line. We're trading under this orange line, which is the boomerang, what I call the line in the sand. It's a support resistance number that's actively moving all the time. So if we trade under 33 now, under this 50% retrace, the next target will be back to this first, this is the Fibonacci retrace level here at 30.50. Now it just happens to be exactly on the level of another one of these blue lines here, so it's a pretty important number there at 30, right around 31. So breaking under 33, watching for a dip down towards 31 is going to be an important move. If they can't hold it, we're going to try to take a chance and see that they're not going to be able to hold 31, break 31, crack it, and that's where we start watching these lines here. Well, these are left over from yesterday's opening range, but that opening range was approximately the level that we had today. Let me double check that. I didn't mark those today. I looked and I saw that they were practically on the same level of today's opening range. Very odd kind of market. Yeah, look at that. Look at it's very bizarre, but look at here's the opening here, and obviously a little bit higher. Let's see here. I'll do it real quick. A slightly higher high on the opening range, and then the first 5 minutes coming in here almost exactly the same. Down here, so we got 33.75, 13, approximately 20 points. 13, so around 23 is where the center of the opening range is. Now, how unusual is that? That's just right exactly where our target is. So more wonderful data for us to use as information for the possibility of where this thing can go. So it's a tall order here, but we're actually looking for 33 to break down eventually, and hopefully, because you never know for sure. You hope your analysis, the market agrees with your analysis. But we're watching to see the market can crunch 33, take them down to this Fibonacci retrace at 31, and actually continue a further breakdown from there. And then we start watching very carefully for the potential to go back to 22. I don't know if they're going to get that bearish or not today. If the riggers are going to let them do that, they're kind of hanging the market up at this point, up around that 2,000 level. So if all of a sudden that gets given up here, we start breaking down under 33 towards 31, then it opens the door for that chance that the underlying bearish market force, the big picture bearish market force, could end up kicking in now, and they may end up just with a Dow up 20 points or something today. That's kind of what I'm expecting could happen. That could, if that event happens, could crunch this price down to that that 22 level, right back down to the center of the newly adjusted opening ranges for today. Pretty interesting. So really, if we get down under 31 and they do break under that, all we can do is watch for the top of the opening range and the center with our target at 22, which was a key number that the riggers keyed off of. You can see it right here. We were holding short at on that trade right around 26. And I was looking for a stronger downside move. They brought it down to 22. And you can see right here, they bubbled it down to 22 and just ramped it. Look at this candle here. No rhyme or reason. They just ramped it straight up and then just drove them up all the way with virtually no pullbacks from that 22 level. Just ramped it straight up here to this blue line again. So a lot of games being played by the riggers today for the third day in a row. And that's why I'm thinking this move here only created the underlying bearish market for us. It only made it stronger. So I'm rather speculating that now, today, this could end up breaking down lower, or at least giving us more of a neutral close. We'll have to see what happens here, as always. But the key right now is if the prices can break down under 33, which they're coming right up on now, break 33, go down to the 31 area. Now you see they're trying to get a little support here. Breaking down under 33 and knocking them down to the 31 area, there's a good chance that the market continue to lose ground and start rolling back to 27.50, which is the top of the opening range, and maybe, just maybe, working their way all the way down to the center again. Oh, here we go again. Big artificial. Right at 33. Gee, what a coincidence. Right at these numbers I'm giving. It's almost like they're listing it in the room. They come right in at 33 and in a big artificial ramp up to 37.50. So now let's see if the riggers are almost done with their program here. And 37.50 maybe holds back. They're back on 33. They bust 33, start working their way lower. Now I'm not sure yet, but that's if their rigging plan is finally coming to some kind of conclusion. I'm actually watching for that to happen. In other words, that the 37.50, 38 area on this big artificial ramp-up candle will now dissipate, and they'll come back down to 33 again and break under that. Otherwise, they're still committed to their game, and they're going to keep trying to push the market up. I think it's going to fizzle. We got the ES at 2,000. Congratulations, Mohan, on that call from 18 to pat myself in the back here a little. Hope you don't mind. 1830 calling at the point they were dipping under 1830, calling for a 150 point SP rally off of 1830. I don't know of anyone else in the industry that called that. I haven't heard anything. I've looked around. 130 points, which had been 1980. They crossed over that yesterday, and now they made an additional ramp up here. And at this point now, I've been starting to add hedges to my account. I think they're still going to try to inch up higher, possibly over the next couple of weeks. But at least for today, for right now, there's a very good possibility of a stronger pullback coming in. And then from there, maybe some more support and another ramp up. For us today here in the room, we don't really care. We just want to see, ideally, a stronger pullback get going under 33 to see if they can possibly go down and nail our target down there at 22. But that's a big if here. We just got to see if they can stop rigging the market up. We just had another, like right off that number I called 33, they ramped them up here to 30, just under 38. So now watching to see if there's more or less a failure kind of failure under 35 that breaks down under 33 and starts working them lower down to the 30 handle for our next decision on the deal. In other words, the start of a lower pattern, and then how far that'll go will remain to be seen. I'm going to keep my eyes on all the indicators here. We're getting some breakdown now, which is great, and watching for a stronger breakdown to get going here. If we can get that 5-minute tape rolling back on the bearish side, then we should have a stronger move going. Coming right down here to this blue line combined with the Fibonacci number at 31. Let's see if we can break 30 down. There we go. Good job, good job. And then the next level is the top of the opening range here at 27.50. And if we can get them going all the way down there without any artificial ramp ups, good chance he'll take them down to 27.5, and then ideally crack that on working their way back to the center of the opening range down here at 23. So let's see if they can break down under 30 now and really start to show some downside muscle. We're up 10 handles or more on the short here, but we're watching for a further breakdown as the market gives up this 75-point gain and they start working them down lower. Ideally back down now, next level 27.50, and then cracking 27.50, working their way back towards 22. Now our goal is 22, but we got to be careful here now, watching for any fast or hard spikes lower, getting them down to 27.50 now, and we're looking for any hard or fast spikes lower down under that. I would say if for any reason we get a hard drop towards 25, we should probably just take the gain and just consider ourselves fortunate. I don't mean to cut our trade short or anything. It's just that when you get a fast spike move in your favor, it's often good to take the gain and just be happy that, what are you giving up a couple points for the idea that the market decided to scream in your favor, right? So that's a good deal. Now, I don't think 27.50 is the end of the road. That's just the top of the opening range. If they can dip down under 27.50 into the top of the opening range here, we could see that's why I'm pegging 25. The center of the opening range, 23. So if they scream down to 25, what's the harm, right? So stay ready. I would even say go ahead, and if they break down under 27.50 and they dive down to 25 area, again, I'm just trying to be as specific as I can. If they dive down from here, break down real fast to the 25 area on kind of a dramatic swoosh lower, let's go ahead and cover up the short and be happy with the gain, okay? Right in here, watching for a move, a dive down to 25 to cover up the short. I'll try to call it out. Might even catch it a little bit early if we have to. We're just hitting 26 now, so let's give it a little more room to blast lower and see if we can get them down to 25 to cover up the short here. Stay ready to cover them up anytime here. 26 coming in, 26. Let's see if we can blast them a little bit lower here. A little bit lower. Okay, go ahead and cover up the short right there. Cover up the short right there. 24.75, 25 even. Boom. Down they go, covering up the short right there at 24.75 to 25. They're still going to 22, but that was a gift from the markets, and we just took that gift, and it happened a lot quicker. than we thought, and that's good. I bet when it was up 41.50 when I got short, you thought Mohan's nuts, huh? He thinks they're going down to 25 or 22. Well, look what happened there. So my analysis was right, and thank goodness for that. We're always grateful when things pan out according to what we want. So thanks again. Hope you caught most of that trade.